Insurance, You Indemnify Me. My name is Sean Michael Walker, and today we have Matt Genova with us, and today we're going to talk about transitioning our production life from maybe the captive world, or transitioning our production life of personal lines only, being a personal lines only person, into this whole new scary world of commercial. And he's already wincing because he's like, it's not scary, Sean. Why are you saying that? But we are going to explore the unknowns, the corners and the recesses of this commercial lines world for a person who's moving from maybe the captive world, who's focused strictly on personal lines most of their life, and they're now going into like this vast, deep blue ocean of independence, and not only independence, but independence on the commercial lines side. I do want to throw out a stat that was published yesterday, and it said something from AM Best Data, and it said something like 88% of all independent insurance, 88% of all commercial lines business, 88% of all commercial lines written premium. That's it. 88% of all commercial lines written premium is written by personal lines agents. Excuse me, written by independent insurance agents.
You want to give this whole thing a restart?
Let's do one more time. 88% of all commercial lines written premium is written by independent insurance agents.
There you go. It is a mouthful.
I got it. There you go. So let's just start at the very start. And let's start at the very beginning. Let's start with you. Who is Matt Genova? Why should people even listen to this podcast? Who are they? They're going, who's that guy? Why would I listen to him?
It's supposedly a good question. So I'm the director of commercial lines at Premier Group Insurance.
Okay.
I've been in commercial insurance for 15 years. I've been a producer, handled all types of accounts, large, small, national franchises, specialty verticals, and recently was with one of the larger independent shops here in Denver for the last 6 years, overseeing their small commercial division and some specialty verticals for them. So it was a great experience for me there. Had a great run, had the opportunity to do something new about a couple of years ago, and that's when I ran into Premier, and so I got really excited about being able to work with our agent network to teach them how to dive into the commercial insurance world, because many of them do have what you call a perception of it being a scary place to work, but we try to help demystify, exactly, is a good way to put it. Provide some direction and some structure so that people can launch into the commercial realm. Okay. It's a very rewarding space to play in, and so we're excited by what we're accomplishing there.
You're a Boston guy? Are you a Boston guy?
I'm a Massachusetts guy, but originally. But I'm not from Boston. I'm actually from as far away from Boston as you can possibly get into the state. I could see both New York and Vermont from my old front.
Interesting.
Yeah.
Well, so at certain points of this podcast, I might ask you to ham up that version of that accent, maybe the colloquialisms of that area.
I'll try my best. I'm not a linguist, but I'll try to throw in some Boston.
If you start failing at it, I'll be like, Gardner, get in here. We need you to help us with
Gardner
this.
And I do communicate sometime in some Northeast country lingo, so it works.
And you went to CU?
Did. Yeah, I came out to CU a lifetime ago. I grew up in the western part of Massachusetts, I was saying, so I grew up kind of on the skiing side of things. So I was, every weekend, every weeknight I was at the ski mountain, and so came out to Breckenridge, I think, when I was like 15 or 16, and said, that's it.
We're here.
I've arrived, and so really just came to CU. And
not see me.
Yeah, exactly. The University of Colorado. And so had a great time there, as most people are, bound to do. And then had the opportunity to move away. I lived in California for a few years. I spent some time on the southeast coast in North Carolina, and did a bunch of different careers too. I'm like a lot of people in that insurance was not my first love or passion. I didn't wake up as a 14-year-old kid being like, I want to go into insurance. So I did business sales out of college. I did some real estate development sales after that. And then when the recession hit in 2007, I was like, well, I'm tired of going to work without a paycheck, in the real estate world. So somebody introduced me to insurance, and they said, why don't you become an insurance agent? They pay you every time your policy renews. You just sell it once and they pay you every year, which was really mind-blowing for me at the time. And so my track was like a lot of people. I went and got my license, and my boss, who has said to me, well, you seem to be somebody who can talk and open doors, and go ahead and here's the phone book and go sell insurance now.
Yeah.
completely without direction, completely without training, and candidly, just very hard. Yeah. Wasn't very good at it. And it took a number of years in order to continue to grow my education, to develop some mentorships with people who I knew in the business who helped kind of teach me and train me on some of the tips and tricks to, learn about how to develop a commercial insurance book. And so, yeah, that's kind of the journey.
All right. Very cool. Well, let's get into this. We got a whole list of questions for you to demystify this scary world of commercial. Okay. The only thing I forgot to mention at the beginning of the show is that today's show is actually sponsored. We actually have a sponsor now. It's the city of Tooele, Utah. So thank you, Tooele, Utah, for your $200 sponsorship. And we can't wait to get your Tooele, Utah Yetis, and we'll show them off on the show and whatnot. So thank you, Tooele.
That's really news to me.
Yeah, it's amazing. I can't believe we got a sponsor. It's just incredible.
All right. Well, good.
All right. So what do you think the first thing is that a new commercial lines insurance agent should understand about that world? And if you don't mind, attack it from the perspective of captive agent going independent. What I mean, they were gods over there in their captive world. Sure. They're now coming independent, and they're going, hey, whoa, what's going on? Why is this? Tell me what they need to know.
Yeah, so I'll answer that question. I'm actually going to start by talking a little bit about the stat that you brought up first, which is 88% of all commercial lines premium is written in the independent space.
Okay. You didn't stumble over that like I did, so way to go.
Well, I do my best.
It was your stat. I stole it from you. How about that?
For anybody who's just listening now, we've talked about this for about 5 minutes before the show. But anyway, so the reason why business owners trust the independent world over, say, the captive or direct is because they really value an advisor who has options for them and can access a marketplace of products. Whereas the direct world, there's no advisor. The captive world, there really isn't that marketplace of products. So they're constrained to live within those boxes if they choose to do business in those channels. Yeah. So the value of going independent from a commercial lines perspective can't be overstated. It's extraordinary, and you will have much greater success talking to business owners when you're able to say to them, I'm a market expert. I know the carriers that best fit your business, and I can go to market and find you the best coverage and premiums for your risk exposures. Sure. So when you're a captive, though, and you're moving to independent, one of the things that we tend to see a lot is the captive agents get super excited about having this brand new cupboard of essentially solutions that they can provide. So now I've gone from having one carrier, or maybe one carrier and access to some E&S through a brokerage that my captive had a relationship with, to now I have direct access to 25, 30 carriers, right? Yeah. And I'm super excited. But 25 or 30 carriers on the commercial line side is very, very overwhelming. And there's a real specific reason for that. It's easy on the personal line side to have a stable of, let's just say, 10 or 15 carriers. And the reason why is because the risk profile of a home and auto is pretty uniform. Doesn't matter if you're in Georgia or Colorado or Chicago. It really doesn't matter. A home is a home and an auto is an auto. And so the characteristics of the risks change. How big is the home? What's it made of? Where is it located? What kind of car? How old are the cars? How old are the drivers? All the rest of that stuff. And the carriers will dump their algorithms into a multi-rating software, and you can plug in, and they'll bid essentially on that risk based on their appetites and what they want to write for that specific risk profile, which is pretty much everything in personal lines. And I'm oversimplifing, and I don't want to denigrate anybody who's focused in that world, but
that is so offensive.
Yeah, I know, right? There's a high level of professionalism in the personal lines world, but I'm trying to explain why the carrier thing is here.
20,000 people are watching this. You know, there's going to be 2,000 of them that are upset about.
100%. Yeah. I mean, you can't really do much in this world right now without upsetting somebody one way or the other in this day and age.
And because the audience is so huge, it's...
I haven't seen the prior, how many likes or whatever on the prior videos. I don't study that.
It's absolutely incredible.
All right, well, good to know. So I stood up a little bit straighter. So let's talk about why that may be a falsehood, or not falsehood, but just maybe a misleading path when you jump into commercial lines. So I now have 20 carriers that I can access, and I can tell you that if you were a captive and you came to Premier Group Insurance, you would have access to 20 carriers potentially. Yeah. But what we do find, and what's kind of a truism of any insurance business, is that while you may have 20 carriers, typically an agent tends to do business with 4 or 5, and about 80 to 85% of their book of business is written with those carriers. Yeah. And so I would say that if you're making the transition from the captive to the independent world, the first thing you realize about the commercial world is that the risk exposures of different businesses, unlike personal lines, are varied. They are not uniform. So a bakery has a different risk profile than a roofing contractor, which is different than a manufacturer or an optometrist's office. And so our carriers don't necessarily write all types of business. So there's varying appetites on what they write. And so you really need to focus in on what do you want to write, first of all, and then finding the carriers that support you in that business. Yeah. And the other thing that tends to happen when people come in to the commercial realm from the personal lines realm is in personal lines, we can kind of take all opportunities that come to us and process them pretty easily. And quickly. We know the information. We get the characteristics of the home, the auto, maybe the inland marine, whatever it's going to be. We plug it into the multi-rater.
Yeah, it might take
we get
an
a quote.
hour longer than something else, but you can get it done pretty quick.
Yeah, but on the commercial line side, because the risk profiles are varied, it's difficult to always know what information I need to gather about which types of businesses. Sure. And it's difficult to know which carriers I need to approach who are going to give me the best products and pricing for that. Mm-hmm. And so the key is to really start to hone in and understand within that vast ocean, as you called it, of opportunities, is to really say, okay, I need to learn certain niches or target markets first and understand the carriers that approach those and expand out from there, as opposed to being somebody who's going to be a broad generalist all the time, because it's very challenging in that way from an information gathering, risk, information transfer perspective, all the rest of it.
What I heard you say is pick niches and go after the niches. So that's your first tip of advice is
correct.
Come into this world and don't just go crazy with everything that you have in the cupboard.
Right.
Select the things that you like and know, and then go deep into those niches. So Chris Paradiso has a magazine. It's right here. Have it. I'll show it to everybody again. Be the last agent standing, commercial for Chris Paradiso. But there's a whole section in this thing that is called Niches to Riches.
Right.
And it's basically the same thing that you're saying. But help the agent understand this better. So I just left Farmers. I've been there for 15 years. I'm now 38 years old or whatever. Mm-hmm. And I now have this vast, deep blue ocean. I have no idea where I want to focus. No idea where I want to focus. All I know is that my brother-in-law has come to me with a limousine opportunity, and my neighbor down the street owns something, 5 locations of something, and my other neighbor down the street does franchises and owns like a whole bunch of things. And all I know is I need to start writing business quickly so that I can start making money, right? Mm-hmm. And so why wouldn't I take all of these commercial lines at bats, even though they have no specific vertical and there's no specific niche? Mm-hmm. Why wouldn't I just start like going after all of it?
Good. It's a really good question. I like to think of the commercial marketplace almost like, a menu of classes at a university or something like that, where like I'm going to go to college and I've got to select a major, potentially a minor, and I'm going to take the majority of my coursework in that sector. Okay. And so, and then you spice up your life by taking some electives from time to time, right. But, so it's like, unless you're in the art school or something like that, or you can do that as your career, like 18th century Renaissance art might be an elective that you find interesting, but you're not going to make your money there.
Right.
So commercial insurance is a little bit like that. Okay. So it's almost like when you're starting out, it's almost like you're going to college and it's like, I don't know what I want to be yet. I don't know what I want to focus on yet. Yeah. So I'm going to try a lot of different things and find out what I want. And it is to some degree. We want to get you on your track sooner rather than later. We tend to coach our agents to say, you want about 60% of your workload to be in your majors, majors and minors, so pick a couple of segments. The key, though, when you're taking in a lot of opportunities is to really coach your insured or the person who's coming to you about the fact that you may not be able to write this overnight. That you may need to do some front-end underwriting. It may take you some time to find the correct carrier or broker or find the right supplemental application that you need to gather the correct information so that your carrier can provide you the right solution for it. Yeah. And I think that's the other thing we hear a lot about from agents when they come from personal to commercials. We just talked about it, right? You can quote stuff relatively quickly and easily in commercial or personal, excuse me. And in the personal world, it's because you know what information to gather as an agent right away. Right. And if you were fumbling every time somebody came to you and said, hey, I've got a Toyota, and you're like, oh gosh, I don't know how to write a Toyota.
Oh,
I've
what
got
are
to
the
figure
brake
that out.
lights on the Toyota
Exactly,
look
but
like?
you don't need to know
How
that
big is
difference.
the bumper on your
the difference
Toyota?
between like a Toyota and a Ford. It's like, no, it's just a vehicle at the end of the day.
Yeah.
But it is different on the commercial side. If somebody comes to you and says, hey, I've got a limousine operation, you're going to go, I don't exactly know how to do that. I've got to do some research on that, which is fine. You can take the time as long as you properly, coach your insured to say, yeah, I'm going to have to do a little bit of research on this, but we can probably help you out. Sure. And in the independent space, more than likely, you'll have access to a market, whether it's through an admitted carrier that you're directly appointed with or through a wholesale broker, to write the vast majority of businesses that come across your desk. Yeah, so you just have to figure out the process and the information you need to gather on those. Now, it might turn out that you really like limousine operations and you say, that was kind of fun. I made a bunch of premium on it. Yeah. I've got a good process for writing them. I'm going to go after 3 more just like it.
I went and did
that's the other thing we tend to coach agents on is like, hey, you just got to win. Go find 3 businesses that look just like that and try to quote them, because the more that you can get some momentum in any specific niche, the more likely you are to start to find yourself in that sort of direction. Yeah. I also do a lot of times coaching with agents to say, as you're sort of approaching the ocean, right, of opportunities, you've got to start thinking about where's your personal experience. Yeah. Right. So we've had some agents that, grew up like playing golf on the golf team in high school. They grew up around the country club and they taught courses, they taught, they were hitting instructors at the golf range or whatever. And they just know golf courses. They know how they operate. They know the language that people speak. Right. They know how to dress when they go to the course to talk to somebody about the risk or whatever. And so we're just like, why don't you target a few golf courses and see if you can go get those as opportunities for you? Sure. Same thing with people who might have grown up in the restaurant business, like waiting tables or there's language to the business. Sure. There's culture to business that when you have some experience in those businesses gives you a leg up over somebody else who's learning it for the first time. Yeah. And then, so that's one key way of selecting some opportunities. The other key way is to use your natural network, as you were saying, like, okay, my uncle owns a limousine company. My cousin owns a restaurant. All of a sudden you could start to use those opportunities. Those people are typically a little bit more lenient on your learning process, so they're good places to start. And if you do have some success, usually there are multiplying opportunities out of that. So those are key ways to do it. And then really the third way is like, if there's something you're particularly passionate about, like, I don't know if you're super into this concept of, plastics injection molding and you just want to go talk to people about go learn all you can do it. And there's plenty of those types of things out there that write good premium and have employees and property premiums, both building and personal property. You can make a lot of money in those spaces, but find out what you're interested in.
Yeah. So let's come up with a couple examples of some people who have gone down niches to riches roads. So I know a guy who wrote all of the 7-Elevens. I have no idea how he got involved in that franchise, but every time 7-Eleven turned on a guy, they just said, here's the person that you go to get insurance. Do you know anybody who's gone niches to riches?
Well, yeah. I'm not going to talk about specifically the name of my prior agency, but we had at that agency 2 specific verticals that were very, very productive. We had a national niche for early education centers and some big franchise relationships. So we were appointed as a preferred vendor. So anytime franchise X would open up a new location, they'd basically give them 2 names. One agent on the East Coast, one agent out in the West, which was us. And depending on the geography of where they were, was pretty much how you'd win that business. Yeah. We had to demonstrate a certain amount of expertise, and we had to demonstrate that we had internal knowledge of what the risk exposure was for those for the early education centers, and we also had to prove that we had a good carrier mix to be able to quote against any third party that might be quoting against those. We also had a specific program for lawyers' professional liability, so we just wrote professional liability for lawyers in Colorado and the surrounding states, and between those 2 books, it was probably $2 million in revenue. It was a good
and so
good
why
business.
Distract yourself with a mining operation in Alaska? It was like we really focus on this other thing.
Yeah,
I'm sure you guys did. But,
and then at that agency, we also had a small commercial division that handled sort of more Main Street type of business, or contractors and whatnot. There was a specific driver to grow those
specific verticals
that they were working in.
Another one I knew of was a guy who did nothing but veterinarians, right? He actually was ready to give up on personal lines and give up on insurance completely because it was just driving him bonkers, you know? Just the day in and day out monotony of being an insurance agent. And he went down to Vegas and bumped into a veterinarian convention. and became buddies with all these veterinarians, and so he's gambling with them and he's drinking with them, and they're getting him into parties and stuff, and suddenly he's learning veterinarian lingo. And goes back to his office after the week of vacation, where he was contemplating quitting being an insurance agent. He said, everybody else, you're taking over personal lines. I'm going hard down this road of commercial lines, and all I'm doing is veterinarians. And then he became like the national veterinarian guy that showed up at the show the next year, bought a booth, and everybody knew him. And and he was the veterinarian guy from there on out. And so like full-blown niche to rich,
Yeah, I think the component that you're talking about there to really hone in on is that as you start to focus in on a specific industry or business type, your scalability grows.
Yeah.
Okay. So you're able to reproduce. I mean, it's the assembly line philosophy from a long time ago, which is if I know exactly what I'm doing, if I know the risk exposures, if I have the right carriers, if I know the information to gather, it simplifies my process, both for me and for the insured and for the carrier. So we talk a lot about creating positive feedback loops in our conversations with our agents, right? And so it begins with prospecting, goes all the way through the sales cycle, and then it even includes retention and servicing of the clients. So you create a positive feedback loop when you work with an industry segment because you know the deliverables. So you know who you're going to prospect, you know where you're going to get your opportunities from. You can start to generate referrals from centers of influence who will feed you the type of opportunities you know you can win on. Through the sales cycle, you're going to understand the information you need to gather. So the process of collecting information from your insured and transferring it. Yeah, because you're no longer scrambling to say, oh, I don't know how to write that limousine service. Let me figure it out. You have it all set up. And then your carriers begin to trust you because you become a subject matter expert. So we should spend some time talking about the importance about carriers. But so your carrier is ultimately who you work for at the end of the day. It's our job as independent agents, as the tip of the distribution model, to find the type of business that our carriers want to write and feed it to them. So when you start to identify within your area of expertise, you start to build a relationship with a carrier where they trust you, where they know that you're going to send them quality submissions, that when your submission hits their desk, they say, this is a submission from Matt. He knows the information that I need. I win a fairly high percentage of the opportunities he sends me. And because he knows the risk profiles and can coach them a little bit on the loss management and the importance of mitigating claims, I know that I'm going to have a low loss ratio on this business. It's a win. I just get a rubber stamp. Okay, go to the next one. And then from the service, after you've sold it, you can just sort of put them into the assembly.
We do need to go back to what you just talked about, though. So we can go back to we can go to service and retention, but we're going to have to spend a big chunk of time on what you just said very, very quickly.
Sure. Well, so just finishing up that thought, right? So now you've onboarded that client, you've put them with the right carrier, you have a good relationship, you know exactly how they need service throughout the year, which just continually adds value to that positive feedback loop, right? And so let's take a deconstructed view back. Let's go back to that limousine service, right? Comes to you at random. I don't know the questions to answer. I've already thrown a wrinkle into that loop right there because I'm saying I don't know exactly what to get. I'm now probably courting carriers that I've never worked with before because I don't write a lot of limousine services who don't know me. So not only do they not know me, I might be sending them information that's not full, not correct, and they may say, I don't know this guy. I have never seen this.
What is this?
Yeah, what is this? Do I have an opportunity to win this? Do I not? Now, most underwriters will pay it attention, but I will tell you that if scenario number one guy comes across with a really quality risk profile, they're going to move that to the front of the line, and they're going to say,
with them, and he knows he's got a good conversion ratio, and it's profitable business.
And it just throws kinks into that process throughout the line. And so as you're proposing your opportunity back to, or your proposal back to the insured, that insured, you may not have the confidence in the coverage or in the carrier or the services that the carrier is offering to be able to really sell that coverage to them. And so again, we're sort of deconstructing what a good process looks like, and then maybe what a more challenging process looks like. And so ultimately what we're talking about is finding the value of learning who the carrier is, what they want to write, finding that type of business. And then once you do, start to create like that snowball effect. Start small, keep growing, and get yourself some good opportunities.
Yeah. I think we've hit my second question pretty hard, which is how would you suggest picking a focus on an industry? We can skip that, you think?
Sure.
Okay. Newer agents sometimes feel like commercial's hard and it takes too long. What do you say to that?
A repeat of everything kind of we've been talking about here for the last few minutes. I think so.
You're saying as long as they pick niches to riches and they get knowledgeable in specific
your
segments, then it's no longer a hard thing.
Right. But your point about I'm new to the business, right? And I think there is a portion of this that is kind of like I've been dumped at university and there's like all of these buildings and there's all these different classes and I don't know whether or not I want to go to sciences or arts or do English or history. I don't know. So you do have to try some stuff. Okay. So what's the best way to be successful while you're out there sort of in your, I'm going to try a little bit of this, try a little bit of that.
Find out, know, I'm going to take, how long would you say an agent should fool around? Like, should they fool around for 2 years? Okay. So they left farmers, they became independent. They have no idea what verticals they want to get good at or what ones they want to focus on. So do you say, hey, go be a generalist for 2 years and just figure stuff out and then, or a year, or how long do you say go?
I think it varies. It varies by a lot of factors. There are some overarching, constraints to always going specifically into a vertical. First might be just geography and opportunities. So if you're in a smaller community, you're going to have less opportunity to focus specifically on a specialty vertical. Okay. So you may need to be more of a generalist by nature of where you're located and your opportunities that are there for you. Sure. Most of our agents that come to us are somewhere near a major metropolitan area, so they don't deal with that as much. But we do have some rural agents that might be in a community of 15,000 people, and for them to say, I'm going to focus on injection, plastic injection molding is going to be, there might be one or two of those businesses out there. Right. I came from a rural area in Western Massachusetts, and so we were more of a generalist agency. I think there's some benefit to being a generalist, to learning a lot of different things before you sort of start to segment out. But there is a key to that. Yeah. And what I would say is if you're a new agent and you're in that sort of trial phase and you're starting out, you want to pick some carriers that you can work with that have broad capabilities. That'd be the first thing I would do. Is I wouldn't start with a carrier that says, hey, we really specialize in human services and nonprofits, because then that's really what they want to see. And if you bring them, say, a restaurant, they're going to go, yeah, we'll write this, but it's not our specialty. It's not our thing. So what you want to do is partner with some carriers. Right?
Like Philadelphia goes deep into specific segments.
Yeah, and Philadelphia is a tremendously useful and great carrier, but they have their niche for human services where they can really they actually really crush it in that space, and they're the number one there. Not necessarily a generalist carrier.
Use them for a roofer?
Yeah. Right? So what we really recommend agents do is partner with some big national insurance carriers. Again, I don't really necessarily want to name them on this one but and I'm happy to take a conversation offline if anybody wants to talk about it. But broad capabilities to write a lot of types of businesses relatively well. And they're generalist carriers. Yeah. And they typically are, like I said, big nationals, so they have broad capabilities to write in a lot of geographic locations. Mm-hmm. They have really strong market representation with
Main Street America.
Yeah,
or just a wide appetite.
Yeah, wide appetite. They have good, what I'm going to really say is they have good territory reps who kind of understand that business, can coach you on that. They usually have good systems for rating and quoting. Yeah. And sort of broad appeal products for that. And so as you're getting started, I would select 3 or 4 of those carriers, get to know who they are, write that business, and then if it doesn't fall within that appetite for those 4 businesses, you develop a relationship with 1 or 2 wholesale brokers who can then sort of take a little bit of your off-the-wall stuff and try to help you work through it. But you don't want to be quoting in the commercial lines realm with 8 to 10 to 12 different carriers for a lot of different reasons, which we'll get into from our carrier relationship portion of this conversation. But what you really want to do is sort of find those 3 or 4 carriers, work with them. They write a lot of business relatively well. And then for all your off-the-wall stuff, try to pick 1 or 2 wholesale brokers who can help you hit those excess and surplus markets.
Got it. What is a fair at-bat? Or what is a good opportunity? So again, let's frame it from the context of I'm a former captive agent. I'm coming over. I'm new to commercial, and somebody puts something in my lap. And what does a fair at bat look like, or a good opportunity look like versus a not good one?
Well, a fair opportunity is one where you have an insured who's going to be willing to allow you to do some front end underwriting for them. So, a lot of times there's information transfer that has to happen in the commercial line space. So immediacy of quoting and binding can be difficult if we don't know exactly what we're doing with the opportunity. So again, we'll go back to the limousine service that you brought to us. Like, I may not know a whole lot about limousine services. If you said to me, I need it, it's a Thursday, I need it by Monday of next week.
You're my brother-in-law, I'll give you a chance, but I need it by Monday.
Right. That's going to be a difficult ask. You're just not going to be able to perform. And the key is just to be honest. Honesty's always been the best policy, which is to say, Sean, thanks for bringing me your limousine company, but I don't have the time to do the underwriting. I need to do some research on this, and I'm just not going to be able to do this for you in that time frame. Okay. Now, if you were the same, came to me and said, hey, my limousine service, what's today, August 12th or something like that, and says, hey, I come up October 1st, I'd like for you to give me a quote on this, and I don't know anything about limousine services, that's a fair at bat, because I can say to you, Sean, that's great. I'd be great. Plenty of time to help you out with this. I'm willing to go do my research, and then we can get through this information, gathering and transfer process with the insurance carrier. So that would be more of a fair at bat. As you start to hone in your expertise in certain areas, the turnaround times are quicker. Yeah. As you build better relationships with your carrier underwriters, you can potentially ask for rush situations if they know you and understand you have a good chance to bind. Sure. So you can contract that time frame a little bit more, the more experience you have and the better you get in the space. Now, one of the big differences between personal and commercial is that with personal, you have that multi-rating software, which allows you to put the information into one system one time and get quotes from 8 or 10 different carriers. Sure. In commercial, we're starting to see this a little bit more, although it's an imperfect system.
Who's the best at it so far? You can say names.
I can say names. Yeah. I think they're all adequately good.
Okay, fine. You're not going to give me you're ridiculous, But let's do this. Okay, fine. Don't say names.
See, I have friends in this business.
Fine. You can, okay, let's just start here. Let's start here. Okay.
Yep.
What exists? Tarmica exists.
So there's Tarmica, there's Bold Penguin. Those are probably the two biggest names that you can get into.
Are there any others? Are there a couple
There are others that are out there.
But those two
blanking on exactly.
a couple chapters ahead of everybody else, maybe.
Yeah, maybe. The key... Let's take 2 minutes to talk about the benefits and the drawbacks of potentially the multi-rating as I see them. Okay. So the benefits of the multi-rater are that typically you can get a relatively quick, business owner's policy quote with like 5 or 6 or 10 carriers. But because of the API situation and the complications of writing commercial insurance with the risk profiles, not all carriers will offer all lines of business through the multi-rating software. Whereas I might be able to get a BOP, I might not be able to get commercial auto or workers' compensation.
So you can't get it all dialed in perfectly.
Correct. So if you're just saying, hey, I've got somebody who comes to me, it's a florist shop and I want to get a business owner's policy for it. I know it's probably going to be a $500 to $1,000 premium policy, and they're just looking for a BOP, which is property and liability combined into one policy. Yes, go for it. But as you start to get into somebody who says like, I'm a plumbing contractor and, I need just a little bit more complex of insurance, you're going to get into that multi-rater, and I kind of call it the maze, where you go down a path where you think you might be going with a carrier and then you kind of hit a brick wall. Yeah, you have to so it's best to kind of, I'm probably going to say something that's going to be really offensive to people who use multi-raters.
There's 20,000 people listening to this. When there's 20,000, there's
a part of me that believes, and I know this from personal experience, that when you use a multi-rater, it's almost your way of not having to learn everything about the carrier. It's just a way for you to dump characteristics of a risk into a multi-rater and say, okay, well, Safeco gives me the best policy for this one. I'm going to go to them. But I don't know why. I just know that they liked it and they want to write it with them. Whereas in commercial, we really need to have a better understanding of our carriers and what they want to write. And so that might be the challenge there with the multi-rating software. Is it useful? Are we seeing it get better over time? Yes. Do we have partnerships with multi-raters that our agents can use? Yes, we do. What I tend to see with the multi-rating software, though, is that we have really high usage in the first month or two, and then it starts to taper off over time as people start to, get into the commercial lines realm and realize that there's more complexity, but also they kind of start to listen to us and know that, hey, these are my 3 or 4 carriers that I want to work with, and it's easier for me to send those submissions directly to those carriers. So anyway, that's a long train of thought. I forgot where we were going before that.
I forget where we were going. Good at-bats versus bad at-bats.
Yeah. Ultimately, a great at-bat is one that you've sourced. So
I love that. Okay, keep going with that.
So this is an at-bat where you've targeted, you want to do business with these people, and you've sourced it, and they've given you the opportunity to work with them. A sourced at-bat tends to give you a lot more control over the process than one that comes to you. So we do a little bit of talking in our production school for our agents about the mentality of the commercial lines insurance advisor, and the number one thing that we talk about as we go through the laundry list of attributes for a commercial lines advisor is kind of being more of a hunter or a harvester as opposed to a gatherer, right? And a hunter obviously is somebody who's going after specific game with specific tools. A harvester is somebody who's planted specific seeds to reap specific crops, So again, we're talking very much about being targeted in our approach about what we're doing. Right. The gatherer is somebody who wanders around the forest floor and is picking up fruits, berries, and here's a mushroom. Yeah. And, by the way, when you do that, you tend to, pick the wrong thing, eat it, and get sick. Sure. So, that happens. That's probably the number one thing is the more proactive you can be, and it doesn't necessarily always have to be through cold calling or knocking on doors of businesses you want to do. Right. You can lay traps that work really well. You can build influence with the right centers of influence and who can send you the referrals that you're wanting to gain. So that's also out there as being a hunter and a harvester.
Okay, cool. Can you speak to the quoting process and the time involved?
Yeah. So ultimately, there's a few things that a commercial carrier needs from you as an agent. Yeah. They're going to need the general business information, which is universal between whether or not you're a bakery or a plastics manufacturer. There are certain things they need, where are you located, what's your building look like, what are the limits, what's it made of, almost standard, almost like personal lines. What are your sales, what's your payroll, all the rest of that stuff is universal for businesses across the board. Those are generated, that information is gathered through standard accord applications and then the property, liability, workers' compensation sections of those accord apps. And you can become pretty quickly adept at, understanding what you need to gather from a business in that realm. Sure. Where it gets tricky is that you're more than likely, as businesses get a little bit more complex, you're going to need an industry-specific supplemental application. And so, for instance, when we did the early education centers, right? Yeah. What made that such an easy process for us is we knew all the general business information we need to gather from each center as it was opening. And we also knew exactly the industry supplemental application we needed to get to our carrier. Sure. And that could be a number of different things. It usually dives into more specific rating qualities about that specific business, but it might also dive into loss control and risk management practices and all the rest of that stuff so that the underwriter gets a really good idea of what they're looking at and what controls are in place and all the rest of it. So you typically need to get that information. So accord general business information, industry-specific supplemental. You're going to need loss history reports. So again, in personal lines, typically you get a quote, you click a button, it runs the auto history, the clue in the MVR for you. Yep. You don't need to go get loss history from anybody else. Yep. In commercial, we don't have that capability, so we do need to gather loss runs either from the prior agent or the insured themselves. Okay. And so you're going to need that. Typically, a carrier wants 5 years because they want to bring profitable business on the books. Sure. And then I always say, write a narrative about what your experience is, or what is this risk? It's one thing to put it on an accord form.
Is everything you're describing specific to like E&S markets, or is everything you're describing? Because if I go do that with these Main Street America, I'll use the name Liberty Mutual, but like if we go Liberty Mutual, it's do we need to provide all that stuff, or do you suddenly go, no, really what I'm talking about is once it jumps E&S?
No, it's not an E&S or admitted specifics.
Conversation.
It's probably more about when you need to get the underwriter involved as opposed to being able to do something through pass-through quoting online. Most of the carriers are getting better.
The details of an underwriter's going to have to touch this one.
Correct. Okay. Yeah, that's really where we're at. And so smaller, less complex commercial accounts can be rated online and quoted and issued.
Quickly.
Do you need to gather all this information for those? You should, because more than likely, there's going to be some questions that are asked in that quoting system about, they're getting better at saying, hey, if I've got a drop-down menu about what is this risk, is it a manufacturer or a contractor, it's going to populate fields on the back end that are going to ask you questions about whether or not it's a manufacturer or a contractor. So you should have some understanding of what those questions are going to be before they're asked to you. Because nobody likes to get into the process with an insured where they're like, hey, I know I called you 2 days ago, but I need this again. And then, now I need to call you and ask you for more information. So the more you can get, and a lot of that is provided in those industry-specific supplementals. But if you ever do have an underwriter that needs to be involved, there's great power in a narrative about the risk. And it's kind of just like a cover letter, right? Yeah. Who is this? How do you know them? What's the opportunity look like? If they've had losses, can we talk about them? What are they doing to prevent them? Sure. And your underwriters or the underwriters at the carriers or the wholesale brokers love to read that narrative right away to give them an idea of what they're looking at. So anyway, those are really the components. And so it's up to us now about how long does it take us to gather all that information. So if we're prepared and we go out on a meeting with an insured, we can gather all that information in one sitting and get it over to the insurance carrier and vastly expedite the process. If it takes us 3 or 4 days or 3 or 4 communications with the insured to get that, it obviously, extends it out.
Yeah.
From the back end on the carrier side, it varies. So an underwriter is a person. This is not an automated. Yeah, I know. It's shocking sometimes to believe this, but and they are, this gets into our carrier relationship. I don't know how much you want me to go into this right now, but so an underwriter is going to sit there and they're going to look at a desk full of submissions, and they have stuff that's due or binding today.
Yeah.
They have stuff that's due or binding in a week. They may have stuff that's due or binding in a month.
Yeah, sure.
And so if you send them a submission for a risk and say, the effective date, it's August 12th today, but my effective date is October 1st. Yeah. They may not look at that right away. They may look at it and say, oh, I don't really need to do anything with this for a few weeks or whatever. And because I've got all these things that are due today.
Sure.
So our expectation that we have of the underwriter is to say we understand their workload, we understand their timeframes of what they're dealing with. So we need to coach our insured to say, hey, look, I've submitted this, but more than likely we won't get a proposal back to you until maybe, couple weeks before, or maybe a week from now, or whatever, or even closer to that effective date if you send it out that way. So there's some expectation setting that needs to be done in that realm with the insured. Yeah. So anyway, but if it's something that you need next week and you've developed a good enough relationship with that underwriter, they may be able to expedite that for you. Yeah. I just wouldn't get in the habit of doing that all the time because nobody wants to work with their hair on fire all the time.
Yeah, and so an agent might say, a new agent to commercial might say, I submitted this application 2 weeks ago and haven't heard from the underwriter. What's the dealio? I'm really frustrated with commercial and writing commercial because why don't I have a price yet? Or why don't I know the terms yet? Why don't I know what's being offered yet?
Right.
And that's just one dramatic difference between personal lines and commercial, because commercial, you might say, yeah, you submitted it, but you're going to have to wait until it gets closer to the effective date.
Yeah, and that's very true. I was going to go somewhere else with that, but I'm going to hold back.
All right, sounds good. Capacity. I've heard a lot talked about capacity lately.
Sure.
What should we understand as agents about carrier capacity and underwriting capacity?
So this is a really big macro question, but in the commercial line space, well, really in any space, because we're dealing with this massively in the personal lines realm right now as well. Capacity is just essentially what is the risk outlay that the carrier is willing to take at a broad level in a certain marketplace. And so what we've seen is capacity shrinking in a hardened market, which we're in right now, for a lot of different reasons. But, for instance, cat loss for property is one where it may be more difficult to get a carrier to write property insurance in a wildfire-prone area or in a hurricane zone or something to that effect.
Sure.
So that's kind of a broad scale answer to that. We're seeing it also on the liability side due to the escalation of claims payouts for liability. And certain carriers also will need to manage their risk portfolio by saying, geez, we're not making a whole lot of money in property, so let's pull back our property capacity now to the marketplace and let's start writing more liability, or let's write more workers' compensation.
Right.
And so those are dynamics that change and fluctuate over time. And those are broad concepts that affect both commercial and personal, and they're regional, and they're worked by carriers and all the rest of it. In commercial, sometimes we see capacity restrictions due to specialty vertical divisions. So as you start to get into more and more complex commercial lines accounts, oftentimes a carrier wants to work with a broker who has a demonstrated understanding of that specific vertical. And so we may have, for instance, and I will use a name right now. I will say that we have a broad and very strong relationship with a company like Travelers.
Okay.
And we write a lot of business with Travelers. I'm not going to say numbers. I don't want me to do that. But
why not?
Yeah, exactly. So Travelers, for instance, will have a specific vertical division within their company for, say, oil and gas.
Sure.
Okay. And within that division, they're going to withhold their overarching capacity, the strategy for capacity for that risk to work with specific agents. And so they are very selective about the agencies that they will appoint in that vertical.
Yeah.
And so a lot of times we have agents who come to us from the captive side. They get appointed through a network aggregator, and they say, hey, I've got this guy who's my cousin who's got
does
oil
gas,
field operations up in Wyoming, and I want to write this. And it's like, well, we don't have access to that vertical because that capacity has been restricted by the carrier to only work with specific agents who have specialties in that space. And there's a whole lot of different specialties. And I use Travel as an example, but they're not
tons of specialties.
They are not the only carrier that does this. You know, there are carriers that have specialty verticals for farm and agriculture, potentially for trucking. So there's a lot of different ways in which, when you start to get into more complex, your availability to products and carriers for those specialty niches may be somewhat restricted.
So let me just take it one step farther. I think sometimes we'll get an agent will go find a deck page from some commercial lines risk or some commercial lines at-bat opportunity. And on the deck page, it'll say, I don't even know what it'll say. It'll say Markel, you know, or it'll say something. And then they go, well, I know we have access to Markel, so why can't I write it? And sometimes, frequently, at some points, it's, well, you've gone down the road and found a policy that is a specialty line policy where there's no access to that product outside of 4 agencies in the entire United States, right? Something like that?
Yeah, something like that. And typically, this is sort of going off on a tangent a little bit, but a lot of times our agents will come to us and say, hey, I've got that oil and gas opportunity. It's written with Travelers. We have Travelers. Let's BOR it, right? That's more appropriate for this conversation with this.
That's what I'm trying to
We've already talked about it. And that carrier, within their rights to do this and say, yeah, we understand you have a big relationship, but we don't have a full comfortability with your expertise in this specific niche. If we were to appoint you, right? This is something we might consider that. We do this all the time with carriers. We say, could you think about appointing us? And they say, sure. And we go through this whole process with them. And they may say to us, well, that's fine. You've now shown that maybe you do have some demonstrated, experience. Yeah. Maybe you have some agents or you have some producers that are going to go after that specific targeted business. So we feel more and more comfortable about that. Yeah. Okay. Here's our growth goal for the year. And by the way, it needs to be an organic growth goal. Yeah. We don't accept any BORs on this business for a year for 2 reasons. One, because we're not just going to give you opportunities without you proving them through the underwriting process. Sure. And the second thing is we already have these established relationships with these brokers who we love that are in that specialty vertical, and we're not going to start pulling BORs from all those people. So there are some sort of carrier dynamics from that perspective that are involved in the capacity issue and with the expertise specific issue. So, I would say that the conversation about the BORs and the specialty verticals is probably more of an expertise, kind of question. Capacity is more of a broad topic that has to do with, the availability of certain products in certain marketplaces and to what limits are available. Sure. And, going on an even broader, we're pulling back from 30 to 50,000 feet now. Right. It has a lot to do with reinsurance, availability and the limits of reinsurance that these carriers are buying, and in a hardened market, everything is going up. Yeah. So the reinsurers are not writing as much. They're not expanding their treaties. They're shrinking their treaties, and they're costing more money. And so we're experiencing that as frontline insurance agents in the marketplace. Okay. So,
we get a lot of agents who want to write in niches like trucking. Mm-hmm. Okay. This can be challenging. Trucking can be challenging. Let's talk about that for a sec.
Sure. Trucking is a great place to play in if you know what you're doing. Yeah. So the first thing I get, my very first thing that I hear when I hear trucking is that people say they want to do trucking, and trucking is a enormous, industry. Yep. And there's a lot of variation within that industry. So when people say to me a lot of the times, hey, I want to get into trucking, I'm like, well, that's my first indication that potentially you need some more education on this, because there's just too much trucking. I'm looking out the window right now, and there's a short haul trucking operation dropping off supplies to a Quiznos sub. Mm-hmm. That's very different than somebody who's going to the loading docks in Long Beach, California, and driving goods all the way to Austin, Texas. Sure. So there's a lot of variation. So if you're going to get into that trucking niche, again, you have to figure out, what do I want to do within that niche? I need to get some specific education on the trucking niche because there are nuances to the policies. The motor carrier coverage form is different than a business auto form, so you need to know the difference there. There are great places to get some additional, education and on that. So IRMI, which is IRMI, which is Insurance Risk Management Institute, offers a great program called TRIP, which is the Transportation Risk Insurance Professional Program. I think it's 5 or 6 different classes. You get the TRIP certification, and I think it might cost you $625 at the end of it for that. So there's a commercial for ERMI. They also do one for construction. But anyway, so you kind of want to hone in those. You also want to work with and understand the carriers that are writing that business. So going back to this beginning of our conversation,
Sure.
one of the things that's dominant in the trucking world is that there are very few admitted carriers that really want to play in the space. And so a lot of the access points for markets are through the MGA or wholesale brokerage realm.
Yeah.
And so I hear a lot from agents, hey, can I get this carrier?
Right.
And they're not actually talking about a carrier, they're talking about an MGA. And when I find out the carrier in the paper that policy is written on, I actually find out that we have access to that carrier through an established relationship already. Yeah. So really knowing, who your access points are really important in that space. And just like anything else, developing relationships with those brokers so that they have some, confidence that you're doing what you need to do in order for gathering the information and have the understanding of the coverage so that if they place a piece of business with you, they can have confidence that, they're not going to have, they're not going to be on a risk that they didn't know about or all the rest of that stuff. So, trucking it can be a great field, but you are going to be playing in the excess and surplus lines markets quite a bit, which means lower premium and manual processes for writing business and renewals. So there's some benefits. Obviously, the premiums out there are very high, and so I think that's what's attractive. But yeah, I mean, it's like anything else. It's a good mix to be in if you know what you're doing and you have a good process for it, right? If you're somebody who says I have a great opportunity to write a lot of roofing contractors. I used to be up there on the ladder, putting in roofs. And I know all the roofers in this town.
I know the roof language.
Fantastic.
Yeah.
We can write roofers all day long.
Yeah.
Most of it's going to go to the excess and surplus lines markets. It's going to be a lower commission, but volume. I mean, it's better to make 10% of $1 million than it is to make 20% of 200,000. Right. So that's fine. Just have your process down and understand what you're doing. Right. And we can help coach through some of that stuff too.
Sure.
Anyway.
This next question might be a little bit redundant, so you take it for what it's worth. But what advice would you give an agent who's nervous or intimidated about starting writing in commercial?
You got to push your boundaries. You got to jump in.
Mm-hmm.
It's like anything else. It's going to feel a little bit weird and uncomfortable. I mean, I was playing, baseball with my 7-year-old son yesterday, throwing catch. The poor kid is trying to squeeze a baseball with a baseball glove and just doesn't really have the motor skills yet.
Right.
Can throw it pretty well. It goes 5 or 6 feet by me in either direction, but it's still fun to do. But the conversation I was having with him at that point in time was, well, if we come back out tomorrow and do this, you'll be a little bit better. Right. If we do it the next day, you'll be a little bit better. So as agents are sort of thinking about making this jump, the key is to get yourself some at-bats, right? Get yourself some opportunities. Where do I start with that? Start with your natural network. Start with understanding, pick a carrier and say, we've used Travelers a little bit, but sorry to all my other carriers I haven't mentioned. But find out what Travelers wants to write and go call on 5 or 6 businesses and say, hey, look, I represent this great carrier. Right. They want to write this business. And I want to have an opportunity to work with you. And you will get no far often than you will get yes. When we talk about pipeline development, right? In order to create a successful business pipeline for a growing practice, the rule of thumb, quite honestly, is to have probably a pipeline in premium that's 3 to 4 times what you want to write. What's your goal? So if my goal is to write $100,000 in premium, I should probably have $300,000 to $400,000 of premium in my pipeline. Right. And that's because even the best insurance agents know on the commercial lines side, you're going to hear no a lot more than you hear yes. So you have to create enough at bats to hit your goal. Yeah. So, but that's probably the number one thing I'd say is you got to give it a shot.
We're running a little bit out of time. So let me ask you, I would love, it's not on the list, so I'm going to zing you with a question that you're not prepared for. But what are some common frustrations that an agent bumps into? So they come over, they start swinging the bat on the commercial line side, and they're like, geez, Louise, this is not cool. I'm bumping into these things that are just common, normal commercial lines things where they just get that rub and they're like, golly, this doesn't exist on that side of the equation. And it bothers me that it exists over here. So that they can listen to this podcast and go, okay, I'm going to get into the commercial world. I'm going to hear Matt mention 5, 6, 7, 10 things that are just going to be foreign to me. And they're going to rub me wrong. And after listening to this, I'll know that they exist and I'll still be willing to jump in.
Yeah, I would say
Time
that.
frames,
Yeah, all that stuff's there, but I would even
excess
say
and
that like,
surplus lines.
excuse me, even experienced agents run into issues.
I agree.
So
yeah,
so
sure.
the idea that you're going to come into this game new and know everything and have it feel comfortable and easy is probably a misconception.
Sure, of course.
So you have to be okay to, make mistakes that are hopefully not errors and omissions mistakes, but communication mistakes, time frame mistakes.
Yeah.
Maybe you need to gather more information than you thought you did. Those types of things. Sometimes we can make misconceptions about our marketplace. So we had an agent who came to us and said, "Hey, I've got an opportunity with a fairly large printing company. It was about $75,000 in premium." Mm-hmm. And I was like, "Wow, that's great. Yeah, we have markets that write that. I've got a whole laundry list of markets that find that." Mm-hmm. Okay, I've written commercial insurance for 15 years. Yeah. Turns out they're getting declined left and right. I'm like, why are you getting declined left and right? Well, it turns out they do some sort of printing on plastic cups that uses a flammable ink. Oh. And so the carriers are saying, no, I don't. This is outside of our appetite if they're doing this. Sure. And so me and my extraordinarily experienced business consultant who was working with the agent RO, we're going, we didn't know that. Yeah, we've been doing this for a long time. We didn't know that specific thing about that. Yeah. Now I don't niche specialize in printing. If I did, I probably would have known that. But that's one of those things that even with experience, there's wrinkles that get thrown into the game. Sure. Now, again, we're running out of time. We're not going to talk about carriers and all the rest of that stuff. But we had our carrier mix, but we do have a carrier that's really trying to grow with our agency right now who was willing to take that risk on because they are in a position of saying, we see the potential to grow with this group. Yeah. We want to write this business, even with that loss. Yeah. But I will tell you that the agent had really great information on that policy. They had all their supplementals. Mm-hmm. They had probably the best narrative that I've ever read about that account. And the underwriter was saying, I'm willing to take a risk on this. Yeah. And so there is that potential there. But even the people that have been in this business for a long time, and as you get into more and more complex stuff, the value of the importance of the relationship with the carrier so that you can overcome some of those wrinkles is really important. And that's the hardest thing for somebody starting out new is that you haven't really fully developed those relationships yet. And so it's hard for people to take a chance on you.
All right. I'm going to do one more question, and we have to talk about it. So the role that excess and surplus lines plays in commercial. Mm-hmm. Because I think a lot of frustration comes when it leaves the normal market and it jumps into excess and surplus lines, and then agents are like, "This is bumpy. Mm-hmm. This has gotten extremely more bumpy than what I was trying to submit with the Hartford or Travelers or Liberty Mutual or so on and so forth." So let's just take a moment. We're not in any big, humongous hurry to wrap this thing up, but we got time. So let's just fully vet out the excess and surplus lines conversation. Then we'll call it quits.
Sure. This is an easy one. So in basically the reason why excess and surplus exists is the same in personal and commercial, right? Okay. There are essentially three reasons why something might end up in the excess and surplus lines market. So I'll just make it really easy. Number one, otherwise an appealing risk that just has a poor loss history. Okay. So this is the substandard auto who's had 3 GUIs and nobody wants to write it, so you might have to go to the excess and surplus lines. This might be your casual dining restaurant that most carriers would write in a heartbeat on the admitted side, but has had 2 kitchen fires in 5 years, and people are going to say prior loss is an indication of future loss. I'm not going to write it. Sure. So that ends up in the excess and surplus lines markets. In commercial, there's this second reason, which is a lot of times why things end up in the excess and surplus lines, is even if the individual risk itself has had a favorable loss history, so I've never had a loss, but I'm in a class of business that has a high propensity for loss or high severity, so either an indication of high frequency or high severity, then we don't want to write that class of business on the admitted side. And those are going to be, higher risk types of businesses where they might end up in larger loss. So, roofing contractors, people who are doing electrical installation on telephone lines and those types of things, or on whatever they are, poles or whatever. Sure. So those types of things, excavation contractors or, people who are doing foundations for large buildings. Come on, those are going to be risks that they may not have ever had a loss, but if they do, it's probably going to be pretty severe. We're not writing it. Right. And then the third reason in commercial is that it's just so unique. Like there's just not a law of large numbers that can allow a carrier to actuarially
jumping out of a hot air balloon.
Yeah, exactly. So we had this conversation actually with an agent who asked us if we could help them write hot air balloon touring out of Albuquerque, New Mexico. And it's like, Maybe, but that's certainly not going to be in the appetite of our admitted markets. We're going to have to go immediately go to the wholesale markets because there's just not enough of them. All right, so we've identified why things end up in E&S.
Yep.
Okay. E&S is a process like anything else. So you're going to access the excess and surplus lines carriers through an intermediary, which is either going to be, an MGA, but more than likely it's going to be a wholesale broker. There are many, many wholesale brokers that we have great relationships with. And basically that wholesale broker is an intermediary from an underwriting perspective for those carriers. The carriers will only offer capacity to that wholesale broker who needs to bind it. So let's talk about some of the things that are in that process for E&S.
Yeah.
Number one is, you're going to get a quote through that wholesale broker. And for instance, when you get that proposal, it may have some concepts that aren't on an admitted policy. So what they might say is there's a minimum premium earned on this policy, right? And this is, again, a concept that should be familiar to personal and commercial.
Sure.
But they might say 25% or 50% or maybe even 100% of this policy is bound, or the premium is earned at the moment of inception.
Right.
So there's no like, hey, I bound this, but I don't really want it.
Yeah.
Like, so if you bind it, you're on the hook.
Oh, I don't necessarily
Correct.
want that
So
policy.
you need to understand that piece of the minimum premium earned on a policy.
There's no getting this money back.
Yes, exactly. Excess and surplus lines policies need to be paid in full.
Yeah.
So if you're dealing with a premium that's high, $15,000, $20,000 premium on an excess and surplus lines policy, you may have to finance that, which is going to add a financing charge to the agreement. So it's a separate agreement, and so you end up paying a finance company over time. It's just getting a small loan.
Yeah. And
then a lot of times there are unique coverage or policy language within the excess and surplus lines forms that you just want to pay attention to.
Right.
Maybe endorsements that may limit or restrict coverage in certain instances, because one of the great things about E&S is that it can be bespoke coverage for high-risk businesses, but it can also be very specific in its language about what it covers and what it doesn't. So you just need to pay a little bit more attention to that. And then obviously it's a full submission, so you're going to need all your court apps and supplementals and everything to bind the business, but it's also a full submission each year for the most part in order to bind that renewal. So it's not like you're going to be with an admitted carrier
all
automatically.
by itself.
Correct.
Yeah.
So when you're talking about the admitted space, typically the benefit is that once you write it, as long as you're not moving it from carrier to carrier, it'll just renew on its own. When you get into the admitted space, it's a more manual process. Yeah. And typically commissions are lower because you are working through that intermediary. Yeah. So anything else?
Anything else?
Yeah. Well, I would say the only thing I would say about excess and surplus is that it's really not that hard if you just learn the process. It just takes some time to learn it.
Yeah.
And then you will be well prepared to write anything that's in that space.
And there's no reason to take your packet of information, your submission, to 18 different brokers. You only need to take it to how many?
That's a really good point.
I think we need to discuss that.
Yeah, thanks for bringing that up. That's a great point. So your wholesale brokers tend to access the same markets. Yeah. So if I work, and I'll just name two right now that we work with, or three we work with, like RT Specialty, RPS, Burns & Wilcox, Amwins, they're all wholesale brokers. Sure. They are going to represent the excess and surplus lines marketplace very similarly to the way that we as independent agents represent our admitted marketplace, which means that if that carrier gets a submission from more than one broker, the second to submit is going to be blocked. So when we're dealing with our wholesale brokers, we don't want to send a submission to 8 or 10 wholesale brokers because they're all going to be approaching the same markets and they're all going to get blocked by each other, depending on who wins the race to get that submission in first. And we don't want to create that relationship. So what we want to do is start with one broker and say, hey, here's the opportunity. If we're not getting what we need from them, we can move on to the second broker, but make sure you give that second broker a market summary of the carriers that the first broker's already gone to. Sure. So that's kind of the way that works.
So there's just some nuances to the process to be polite to everybody involved in the process.
Absolutely.
Okay.
Pay attention to those relationships.
We're going to wrap it up. Anything else you want to mention as it relates to this? I feel like we've just barely scratched the surface. Do you feel that way?
Well, I think that we haven't had the opportunity to really go through, the importance of developing. Like we've talked about the underwriting relationship quite a bit. Right. There's a whole side of, generating a book of business with a carrier so that you can maximize your revenue growth. Right. So there's a whole lot of that stuff we could have gone into, but the long and short of it, in my opinion, is that commercial is not necessarily a dark and scary place. I think people get overwhelmed by the amount of different types of risks that are out there, and so they become a little bit paralyzed by it. So we try to give some guidance about how to get started, and I hope that maybe some folks have taken some of those nuggets away from this conversation, and get yourself some opportunities and work with, find a mentor if you're an independent agent who's just out there, doing it on your own. If you're a Premier Group agent or working within a cluster or an aggregator, find somebody at home office who might know a little bit about it and set up a mentorship. I started off this conversation by saying, when I started, I wasn't very good. I needed that mentorship. I needed people to teach me, how to do everything from how to prospect, how to gather information, how to transfer it between the carriers. And so it's not easy to learn on your own, but most people have the opportunities to find some support.
Yeah, I would just wrap up by saying I don't think it's a dark and scary place. I just think it's a different game, right? Mm-hmm. So on the personal line spectrum, you're playing, for example, soccer, and you get really accustomed to all the rules in the game, and you get really good at being a soccer player.
Sure.
And then once you jump over to commercial lines, you're no longer playing soccer. You're now playing a different version of soccer, like rugby or football.
Right.
And suddenly you're going, well, it's got a ball, but it's different. I mean, this is really different. So maybe the better analogy is like football and rugby, right? So it's kind of the same game, but it's not the same game in any way whatsoever. So you kind of recognize aspects of it that are going, oh, maybe this should be an easy transition.
Right.
And then you go to make the transition and you're going, what's going on?
Yeah.
I have no idea what's going on. And so it's not necessarily a dark, scary place. It's just a matter of being willing to say, I get it. Football's not the same as rugby. I'm going to be playing a different game for a season or two. I'm going to be the guy who's asking questions going, what just happened there? Because I don't know what's going on.
Yeah. Yeah. The rewards too can be substantially greater. I mean, I told you I was working with an agent and they were trying to close a $75,000 printing company, which I think we will eventually help him secure. And his light was turned on a little bit to say, wow, that's a lot of premium I can bring on the books right away.
Sure.
And starts to make the value judgment on how many personal lines at bats and wins do I need to make that up.
Great point.
And so he starts to say, hey, maybe I'll devote some of my time. And my goal whenever I talk to agents is, unless you're going to dedicate or have somebody dedicate 100% to commercial lines, chances are you're going to be doing a mix for a while. Yeah. The goal isn't to say to agents like, ditch your personal lines business and write commercial. Right. It's, can you allocate a certain amount of your time? Can you have some time management?
And play both sports?
Yeah, and you can. We have a whole metric that shows if you just devote 10 hours a week to commercial lines, what does that do to the revenue growth of your business if you use certain assumptions about how much can I close in my average premiums and all the rest of that? And it is meaningful. And so, it's kind of like, are you going to play a low-paying sport or are you going to pay, a high-paying sport? Whatever. Yeah. There are relief pitchers in Major League Baseball.
That's the first offensive thing that you actually have said.
I was
You've
about to say,
offended me because you just said personal lines is a low-paying sport and commercial lines is a high-paying sport. Is that what you just said? Yeah. All of my viewers are horribly offended about that comment that you just made.
Well, yeah. Give them
20,000 viewers.
Give them my number. Send out my email address. Flashing on the bottom of the screen right now. I'd love to hear from them and have the opportunity to talk to them about how jumping into this side of the business can be rewarding. And in fact, I think one of the first things I said when I decided to join Premier Group, when I talked to you guys, was like, we have to do this for our agents. We have to explain to them the value of getting into this side of the practice, because if they aren't aware of it, they can make their own decision about whether or not they want to do it or not. But if they aren't aware of it, then they're being blind to this opportunity to really grow the revenue in their book of business. Yeah. And we have some extraordinarily successful personal lines agents who should not devote the time because they have such a machine going on the personal line side that to throw commercial in would just be an unnecessary wrench unless they were willing to hire somebody specifically to do it. So there's all types of folks out there running all types of business practices, and I don't want to make judgments about who's doing what right or not. So it's all good.
Is there anything else you want to say?
No, I'm ready to be done.
All right. Thank you. Have a good day. We'll talk to you later. Thanks, everybody. Bye-bye.
Premier Group Insurance is providing this podcast for informational uses only. This podcast should not be relied on as legal or medical advice. Reference to any specific product or entity does not constitute an endorsement or recommendation by Premier Group Insurance. The views expressed by guests are their own, and their appearance on the program does not imply any endorsement to them or any entity they represent. Views and opinions expressed by Premier Group Insurance employees, i.e. Sean Michael Walker, are those of the employees and do not necessarily reflect the view of Premier Group Insurance. Copyright 2022. Premier Group Insurance, Inc. All rights reserved.